This is Robert with Virginia Farm Bureau's Grain Division. Glad to bring you the Merchandiser Minute today, Friday, May the 21st, 2021. Today was June option expiration, and we definitely saw some of that impact in the futures trade, along with a lot of different influences this week, working a lot of different ways. Let's take a look to start off at how the futures closed this week in Chicago. Your December corn futures contract closed up 4 cents for the week at $5.46 a bushel. Your November soybean contract was down, disappointing this week, down 40 cents a bushel to close at $13.60. And July wheat, the new crop contract, was also disappointing this week for us, down 33 cents a bushel for the week to close at $6.74. Several producers this week made some comments about how Minneapolis wheat, Kansas City wheat, and Chicago wheat are trading in different types of relationships than what we're used to in the last few years. Give me or Josie a call to talk about that if you'd like to, but it's definitely making an impact on the futures trade, how these three different futures contracts are trading, how the spring wheat crop looks, the hard winter wheat crop looks, and the soft wheat winter crop looks is impacting that as well. So we can talk about that over the phone along with other things. Call us anytime. Let's take a look at some USDA numbers that we saw this week. Export inspections on Monday, corn came in as expected and beans and wheat came in above expectation. Monday's export inspections report will be highly anticipated only because last week we saw barge traffic halted for, I think, 2 days on the Mississippi River in Memphis, and we'll see how that impacts what goes on in the Gulf and what goes on as those barges move down the river to the Gulf ports to get loaded out. Maybe the impact won't be until the following week, but the export inspections report will be watched a little closer on Monday. When we look at the sales report that we got this week representing all export sales for the previous week, corn, wheat, and beans all came in as expected. But the real story of this week and last week, really since I think May the 8th, was the first trading day where China has shown up, and a few of those days Mexico has shown up on the daily sales announcement systems, where we see contracts of more size than what can wait until the weekly export report show up. We've got 9 out of the last 10 trading days where China has bought corn. If you add all those bushels up, if I've done the math correctly, there are over 300 million bushels of new crop 2021-2022 corn to go to China. Remember, with the inversion in the futures board, the December contract being a lot less than the old crop July contract, it looks pretty advantageous for China to be making those new crop purchases. And when you look at some of the USDA numbers, it looks like now they've bought about a third of the projected corn that they would be buying from us for that marketing year that starts this year on September 1st. Remarkable. It's remarkable to see them buy this much corn at this time of the year. So we're going to watch that again next week, the daily flash sales reporting system from USDA at 9 a.m. to see if China is just back in buying corn, buying corn, buying corn. The drought monitor this week, we have seen from the government that the drought is growing in Minnesota and in Michigan. We know that North Dakota has received some rain where they've been so dry for so long, really since last August, but the drought still continues up there. We're going to be watching that and hoping for more rain. And y'all are out here living it and see it. If you look at that drought monitor map, Virginia is a huge chunk of Virginia now in the abnormally dry category. We're not in moderate drought category yet, but we're all hoping and praying for rain next week. When we look at crop progress, we got on Monday, the thing of note there, soybeans came in at 61% planted in America, 61%. The 5-year average on that date is 37%. And my sources that I looked into for this are telling me verbally and in writing that this is a record soybean planting pace for the United States since records have been kept. 61%, and that tells the speculator, again, we were down 40 cents this week on soybeans. Rain came in the Corn Belt, as y'all know, in a lot of places. We got a record planting pace, and that looks like one of the influences on why speculators wanted to liquidate some of their length and sell off this week in beans. But again, USA corn, 80% planted. The 5-year average is 68%, well ahead of pace there, not record, but again, beans 61% planted, and the average is 37. Virginia wheat came in at 66% good to excellent. We need some rain, as y'all know, to finish this crop out. Virginia corn is well ahead of our normal planting pace, as well as our soybeans. When we look at the Commitment of Traders report for today, I've got that report, just came out May the 21st. Wheat, 14,000 futures contracts long by the managed money speculator. Corn, 291,000 futures contracts net long, and soybeans, 152,000. Remember, just within the last month, we were approaching and hovering around 400,000 contracts net long in corn. We're showing up today, effective of Tuesday of this week, 291,000. So we see, again, liquidation of long contracts, or liquidation of length. The speculator is on the side now with a lot of money in their pocket, and we're going to be looking for whatever that reason or reasons, influences, or whatever would get them to jump back in buying futures. So we're going to keep our eye on that. Again, the surprise for the week, outside of China buying corn, was the National Oilseed Processors Association report on soy crush for the month of April. It really caught the trade off guard. It came in way below expectation on how many soybeans were crushed. It was disappointing, and it raised a lot of questions about bean availability and how we're going to look here in the month of May. We did get an amazing ethanol report on Wednesday. We showed a 14-month high. Another surprise here on the ethanol report. Production was up 5.4%, and y'all, we went past 1 million barrels a day of ethanol production. We're talking kind of pre-COVID levels now, as people are out driving and the demand for ethanol is increasing. That's really good, obviously, for demand for your corn. And we also saw the stocks basically stay the same, but we're at a 6-month low at 19.4 million barrels, the report said on Wednesday. Another bit of information today, we watched all week the Kansas Hard Wheat Tour. A surprise there as well. We saw yields from that tour come in higher than expected, 58.1 bushels. That's way above what they saw the last time they did this tour in 2019. They didn't do one in 2020, so that took a little bit of wind out of the sail, not only in the hard wheat, the Kansas City futures, but the Chicago futures this week as well, to see the yield potential come in stronger than expected for Kansas wheat crop. I mean, again, they had a lot of mud on their boots this week on that tour. They got a lot of rain out there last weekend. So next week, we're going to be looking for a different week. Last week of the month, we know the following week's going to be a short week with the Memorial Day holiday. We'll see how positioning goes with the speculator. And the big question that I'll leave you with today that we're all asking, are we going to see funds continue to sell futures contracts next week, or are they going to be jumping in and buying again? We're going to be watching planting progress, looking at weather, and let us know if we can help you to talk about any new crop marketing. Look at the percentages you're at, what you've got sold, helping you manage your risk. Give Josie or I a call. This is Robert at Virginia Farm Bureau's Grain Division.